Onward Headhunting is the source for elite M&A, operations, and finance executive talent exclusively for private equity funds and their high-growth portfolio companies. When top-tier leadership seems impossible to find, Onward delivers with speed and accuracy. This is retained search built to shape the future of your most important assets. Learn more on LinkedIn or visit onwardheadhunting.com to start the conversation. And let's move your most critical executive searches onward.
This is Scott Becker with the Becker Business Podcast and the Becker Private Equity Podcast. We cover investing, startups, venture capital, private equity, and a lot more here, a lot of technology as well. Today's discussion is unemployment versus inflation. And that's the headline, unemployment versus inflation in the title. Here is a challenge that Fed Chairman Powell faces. As he moves towards quantitative easing, meaning reducing the Fed funds rate, the rate at which the federal government lends to other banks and tries to sort of pump some energy into the economy. That's being done to help unemployment. Unemployment's at 4.3% and seems to be poised to get worse. Horrendous numbers this last month. Only 22,000 jobs created in August, and a way over the estimate of jobless claims filed in the last week. So 263,000 jobless claims filed. So what does that mean? That means Fed Chairman Powell sees the need to reduce rates to juice the economy some to make money a little cheaper. That is all well and good. The problem with making money cheaper, particularly when you combine it with federal deficit spending, is that you also have the impact of potentially driving up inflation, which tariffs can possibly do too. So as Chairman Powell said at the Fed meeting, is that he's got no risk-free choices. He lowers rates that could help unemployment but hurt inflation. If he keeps rates the same, we could go further into what really looks and feels like a recession, even though we're pretending we're not because of so much deficit spending, but it really does feel like a recession. We go further down that path if he keeps rates high. So at this point, he's going to take the lesser of two evils, try and lower rates a little bit to juice inflation, but that has the potential to further impact negatively and cause inflation to increase. So those are the choices that he's facing. Again, jobs versus inflation, fascinating to watch, fascinating challenges. Thank you for listening to the Becker Business Podcast and the Becker Private Equity Podcast. Thank you very, very much.